So I recently sat down with David Morgan. Now, you've probably already heard of David Morgan. He was known as a silver guru way back when I started investing in 2010, 2011. He is an analyst that has been around the block in the resource sector for a long time, and we had a very interesting conversation regarding energy. If you're invested in the junior mining sector, then I am very sure that you're somewhat interested in also the energy sector, and that is a very large category of investing. It could go lithium, oil, copper, and all sorts of different things. Listen up to what we had to say. Okay, so we are here with David Morgan. I have followed your stuff for quite a while now, and I remember silver being really, really hot way back in, 2010 and 2011, and you were known as a silver guy. Now I see you now talking about energy a lot. Why is this transition happening, and is this a sign of the bottom for silver?
Well, I've got that question a couple times, and certainly it could be. I definitely have been passionate about the precious metals, in particular silver, for a very long time.
Mhm.
And when I started the Morgan Report, we cover and still do all the resource sector, which is all the minerals out there. In fact, we were the first on rare earth elements. We were the first on cobalt, and some of these other things that have come to the fore over the last several years.
Mhm.
So that's part of the story, but the one part we didn't cover in the resource sector was energy. And energy is absolutely the most important part of the resource sector because without energy, nothing happens. So I've had that thought, that idea, and that reality with me for a very long time. And I was asked by some business associates if I would consider doing a report on the energy sector. And I gave it a great deal of thought before I jumped in, and I found was not what I could find a comprehensive energy report, meaning that they covered everything that's conventional, like oil and gas and coal and uranium and that kind of thing, but all the alternative energies that are coming to the fore, like solar, wind, geothermal, some of the exotics. There's like a conventional energy letter, and then there's like an alternative energy letter, but there wasn't one that did them all. And so I decided that's what I wanted to do, and decided to go ahead and jump in and start this series of reports that we've been doing now for a few months.
So, what do you see that's really exciting about the energy sector right now?
Well, first of all, it's a very interesting proposition for investors because there's so much upside in the sector, not only in the alternative sector, but also in the conventional sector, both in the oil and gas, the fossil fuel sector. There's a lot of upside, and of course, there's a great deal of upside in the new technology, the battery metals, for example, because solar's become so popular and the electric vehicle market. So there's a great push toward what the battery industry is doing, and this hasn't been an area where there's been a lot of effort and technology for a long time. Of course, it's been ongoing now for a few years, but you go back a decade or so, and very few people were thinking about how to improve a battery. Of course, now that's one of the forefront issues that is taking place. The other one is, solving the world's problems. I mean, none of us can individually, but there are so many correlations between the amount of energy per capita and the lifestyle of the given person. So, in other words, the more energy per capita or energy per person that we produce, the higher lifestyle everybody has. So, if we can find a solution to the fossil fuel conundrum and provide energy cheaply, efficiently, and ubiquitously for everybody, we are certainly going to solve a lot of the problems that we currently have on a global basis.
Is the energy sector similar to the mining sector in the fact that it may be cyclical? And if so, where do you see us being in that cycle right now?
I mean, to touch on the mining sector first, and then we'll transition into the energy sector. The historic norm for the mining sector is a boom and bust cycle. And this is true kind of the business cycle, but not to the level that the mining industry has to go through. So you'll get in a situation where there is a very low supply and a low price in any given mineral. It could be iron ore, it could be copper, it could be silver, it could be uh, any of the major metals. And basically, you're running out of product, more or less. And so then, because of supply and demand, this still does work to a degree. The industry will start to, I'll use copper as an example. You deplete the copper stores that getting low, the price is low, and all of a sudden it's getting depleted where someone's got to go find it. So the price starts to get bid up because there's not much left. And as the price gets bid up, then there's people that say, oh, I'm going back in the copper mining business, or I'm going to reopen this copper mine that we closed down 10 years ago, or I know. And so all of a sudden, over time, I shouldn't say all of a sudden, but over time, then the copper industry basically gets overbought and too many or too much copper comes online. And so now you got a glut of copper. And so now the prices start to fall back, and copper mines that aren't that efficient close down. And they just go through this over and over. It's a cycle that just really is there. I mean, it can't be denied. So on the energy side, similar, although energy is something that, there's a lot of people that might want it. So the demand side is probably even greater than it is for the metals, but unaffordable or unobtainable. I mean, if you look at a lot of the places in, the less developed parts of the world, there's no power lines going through, a lot of these areas, and they now are relying on solar to bring them electricity. But so similar, it's basically conventionals, which is, oil, gas, coal, and there is too much or too little, and it ebbs and flows similar to the metals. The oil industry is similar to gold, meaning that you can get it overbid and a parabolic move from time to time, which is what we saw in the oil industry. I forget the exact number. I follow it closely, but not as close as I follow the metals. But, we got up to what, $147 a barrel or something. I forget the exact number, but it was a parabolic move up. And, most of us thought this is unsustainable, and it was, and it came down. Where I was incorrect on that and the metals was that the pullback was deeper and longer than I expected it to be. But nonetheless, the market knows more than anybody, and I've always maintained that.
Now, I gotta ask, with the audience that I have here, most people are very much interested and currently invested in uranium. What are your thoughts about uranium?
Well, I'm pretty agnostic about uranium. I think, first of all, we do have some picks in the report on uranium. I've got one. I've only really got one or two. And I think it's, for investment purposes, I think it's a good investment. I also like the one that we have because it's got a vanadium project that's shovel ready, so to speak. And the company is extremely efficient. It's very, very well run. So my long-term view on uranium is positive. I think from an investor standpoint, it's certainly good. And then we have this new law rule that's coming up. I forget the number. I think it's 232, but don't quote me.
Yep.
Where
It's 232, all right.
Yeah.
That
so
much
you
I know.
know as much about it as I do, but it could have an impetus to push the uranium sector even higher. So bullish on uranium.
Cool. Do energy investments hedge you against inflation at all in the way that gold does, or is it completely different?
No, pretty much does. There's a pretty strong correlation between the metals and oil, silver in particular, believe it or not. And yeah, it is because, again, everything in the world runs on energy. And if energy costs are, a lot of the main thing about the energy sector and inflation is that energy comprises everything. And, without me talking too much, it affects food because you're using petrochemicals for fertilizer. You plow and reap using energy, and you transport using energy. So every product that gets to the supermarket has got a lot of energy involved in it. And same thing with your clothing sector or your retail stores or your entertainment. I mean, everything's got to be transported. So if fuel costs go higher, uh, that's a good, that is a hedge. In other words, if you own an energy company, take an oil company as an example, and gasoline prices and oil prices are going higher, you're pretty much hedged against inflation. Yes.
When we talk about energy, the energy sector, it's kind of a broad stroke, and I mean, you could be talking, lithium, you could be talking oil, you could be talking a vast array of different, metals and things like that. Is there any one particular story within the energy sector that you're more bullish in 2019?
No, that's a great question, by the way. A lot of the alternative energy sector, which are great ideas. I mean, I'm all for free markets. I'm all for competition. I'm all for solving problems. Um, but a lot of the ideas surrounding the alternative sustainable energy really aren't as sustainable as most people think. And that's what I break down in my reports is that, for example, solar, which is kind of the darling. Everyone understands the sun gives us, so much energy, and you know, but when you make a solar panel, there's a lot of toxic chemicals that are involved, and those go into the atmosphere. There's no way around it, at least not now. Or are the manufacturers willing to spend the extra money to capture these hazardous chemicals? So that's part of the equation. And then, of course, it's not indefinite. I mean, a solar panel doesn't last 1,000 years. So there's some replacement value that has to be taken into account. Of course, there's transportation costs to put it wherever it's going to be and set it up. You've got to pay somebody to install or install it yourself, and there's wiring involved and blah, 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 blah. So my point being is that I break it down not from a financial aspect as much. I know we do look at it financially, otherwise, we have to figure out if we got a good investment or not, but also from energy return on energy invested. And that's really the best way for us to analyze whether or not an energy investment is worth it or not. Meaning, how much energy do you have to put in to make a solar array? And when you have the solar array installed, transported and installed, and you get energy out, how long does that array have to capture energy from the sun and convert it into electricity until you have break even? In other words, how long does that have to run for this amount of capital costs get paid back? And from that point, how much is the useful life of that solar array? So, and these are, that's the way I think. It's the only really logical way to look at these alternative energy sources, because a lot of people have the idea that, oh, I'm driving, electric vehicle, and I'm really contributing, and that's not necessarily true. I mean, in some ways, and it's individual case by case basis. I don't want to get too down the rabbit hole here, but just because you drive an electric vehicle doesn't mean you've really lowered your carbon footprint, even though you might think you have. And when you're driving that EV, yes, at that moment in time, you've got a lower carbon emission print than you would if you're driving a diesel truck or something. But if you factor in, again, what I just said, the total energy equation to get that produced and get it on the road, and then if you're plugging it in and the electricity you're putting into your EV is from a coal plant down the road, what are you really doing? So there's a lot more to it than a lot of people think, because they don't think very deeply about the sector and how to analyze it properly.
So, when speculators and investors they go into something as risky as mining stocks, they do so because they have seen profits in the past that have been, like 10 baggers, 5 baggers, and things like that. That's even the common language, within that sector. Is this something that's also expected with energy stocks, or would you say it's you know, uh, just longer term, slower growth type of stocks?
Well, I'm really glad you brought up that question. So let's start with the mining side. Basically, most of your unsophisticated investors get inundated with the 10 bagger, 20 bagger, 30 bagger type of situation. And those things do happen very, very rarely. In fact, for a discovery to take place in the mining sector, whether the discovery is lithium or copper or gold or whatever it is, it's roughly a 1 in 4,000 shot. But again, the industry is inundated with ad copywriters that talk about XYZ mining company that's made this great discovery in, Bosnia or wherever, some obscure place sometimes, some, whatever. And they make these stories about these situations. But the actual sector and the way we do it in the Morgan Report is we look at top tier, mid tier, and speculative situations. Most of the energy, time, and effort is devoted to the speculative section, which is the least likely to make you money. And that is where we focus some time, but not all of it. The big money is made in the, let's say, the stodgy, blue chip stalwarts that are going to make the metal, or I should say they're going to dig the metal, refine the metal, and contribute to the overall betterment of society at large. Because without metals, if you can't grow it, you got to mine it. Without mining, we wouldn't have the lifestyle we have. I mean, the mining sector is hugely responsible for computers and the iPhones and the laptops and the automobile and everything else we have. So, if you're really green and hugging that tree, and that's okay, I want to be a good steward of all the resources that we have. I certainly do, believe me. But nonetheless, you couldn't have what we have without mining. So coming back on point, we look at the real deal. Who's really producing. In fact, I'll give you a 10-bagger real quick. I had Hecla Mining on the Morgan Report very early on when I first started the report. It was 50 cents a share. It was still on the New York Stock Exchange, ready to be delisted because the New York Stock Exchange doesn't like penny stocks on their exchange. And that stock went from 50 cents to $5 in a matter of a couple of years. Of course, my people made a 10-bagger on a NYSE stock. So sometimes even these big companies, which is Hecla's a pretty substantial company or wouldn't be on the NYSE, will make a 10-bagger for you. So there's that. On the energy side, it's almost identical, except on the energy side, you're not inundated with all of these micro cap, get rich quick, 10-bagger, 20-baggers. There's some of that goes on in the energy sector, but not nearly to the degree that the mining sector has it. So there is a little bit of that. And of course, we again look across the board. I mean, if there's an opportunity and it's a micro cap stock, we really believe in it and the management will make a bet on it, but we're not going to put an investment in it. There's a difference between speculating effectively and wasting money by betting on something with too much money. We have the philosophy of bet a little to win a lot in those type of situations. And big money goes into big companies where we, getting a dividend. We can see, the quarterlies, we can see the projections, we see what the free cash flow is and everything else you do as a financial analyst to make sure that our people are going to get a sound investment. Did I answer that question properly?
So let me see if I understood it correctly. So, making a comparison back and forth with mining. In mining, at least with the market the way that we have it today, you pretty much have to be lucky in order to get something like a 5 to 10 bagger, or really risk capital in order to do that into companies that are, half of them are scams and the other half don't really know what they're doing. In the energy sector, and what you guys focus on is mostly companies that are a lot more solid, but that still maintain that profit potential. Is that sort of the gist of it?
Pretty much, except in the Morgan Report, I also focus on big companies that make you profit, and I stay away from the hypey type of things for the most part. I have to cover them to some level or be out of business because, again, repeating myself, there's so much hype in the mining sector about this, get rich quick kind of attitude and these stories that sound phenomenal. Very few of them ever come true. So we do spend some time there, but that's like 1/10 of the whole portfolio. The other 90% is devoted to top tier and mid tier companies that produce the metal and have a good balance sheet and income statement. So in other words, they're solid investments. So we do that on both reports, both on the mining side and on the energy side. We strive to do good, solid value investing and a little bit of speculation.
Great stuff. And can you tell me more about the free training that you have going on right now within the energy sector?
Yes, well, my partner, Manish Bindi, wonderful man and very good thinker, deep thinker, and far range thinker. And, again, we discussed this whole energy sector before we decided to team up and do um, this venture together on these reports. And so we outlined what we wanted to provide for the public. And this was a webinar where we had it live in London, and yours truly and he and others participated in this event, and we filmed it and we have it on the web for everybody. But basically, it's a general wake up call to everybody on where we stand currently in the energy sector, why there is a gap that is going to occur roughly or in another year or so, 2020, by the IEA, at least according to them, and I totally believe what they're saying. So there's this huge opportunity going forward to fill that gap, meaning the conventional with alternative energies, and this spells a lot of opportunity. Plus, a lot of investors, and I'd say more so, and this is my take on it, my interesting point of view, are looking for contributing to the betterment of all. So some investments, most investors are self-serving, and that's the way it is and probably how it should be. But if you can invest in something that provides a profit to you and at the same time is helping to bring forward, let's say, sustainable energy, renewable energy, something that's beneficial to society at large. I mean, that's kind of a win-win situation in my view. And of course, this is not exactly what we're striving for, but certainly what we're looking at. We're trying to find absolutely the best in both conventional and alternative sector that will bring rewards to the investor and hopefully rewards to the energy sector at large.
Thank you very much, David.
My pleasure. Thanks for having me.
Now, if you're at all interested in energy investing, which I definitely am, then you can click the link below and you'll be taken straight to the page where you will learn more about what David Morgan is into and what he's been investing in. All right, this is it for today. Thank you very much. I'll see you in the next video. Take care.